Okay, let's go ahead and get started.
Okay.
And Madigan, thank you. Mads, if you could watch the chat for me, as Mads said, we're happy to make this interactive. So if you have questions, if there's something specific you want to chat about, please don't hesitate to put that in the chat. And today we are going to talk about all things compliance and energy and utility data. And before we start on that, a little bit about EnergyCAP and a little bit about me, your host today. Also, I apologize. I don't always sound like this. I have a cold, and of course, today is like the height of coughing, scratchy throat day for me. The one day that I have to be on here or get to be on here with all of you. So, if you have trouble hearing me or I'm sounding off, I apologize. Please don't hesitate to let me know. I can always use my microphone as well if you're having any trouble. But I'm going to do my best because I am very excited about this subject matter. It's one of my favorite things. For anyone who's new to EnergyCAP or have not heard of us before, we are an energy and utility data management platform. We have been in the business for more than 45 years. We've been around a long time and have multiple products, all of which are relevant to today. So we have our core platform along with new AI features. We also have Carbon Hub for Scope 1 through 3, Smart Analytics, which is interval data management, and then Bill Capture Services, where we take some of the heavy lift off of you. My name is Sarah Uranowski, and I head up all things product marketing for EnergyCAP. Before that, I have more than 15 years in the energy industry, both as a mechanical engineer, where I specialize particularly in compliance. So, again, this is a subject that's near and dear to my heart, both all the way from power gen and nuclear through distribution, working for utilities, and now working with building owners and all of you, which I love to do. And today we are going to talk about benchmarking and other types of utility data laws. So there are four main categories of these kinds of laws in the US today. So there's benchmarking, which is, as of now, the most widely adopted. And as a summary, requires large building owners to measure and report their energy use to a common system. Most often, that system is Energy Star Portfolio Manager, which is a free federal tool. Building performance standards go a step further than that, and they set mandatory performance targets. So they're usually based on whether it's energy use intensity, sometimes carbon emissions per square foot, so carbon emissions intensity. It's requiring you to actually make changes in addition to tracking your energy consumption. And audit and recommissioning laws are super interesting. We're not going to talk a ton more about those today, so I do want to touch on them now. And audit and recommissioning laws kind of sit between those two other kinds of legislation. So they don't require you to hit a specific number or reach a specific target, but instead, what they require you to do is have your building systems professionally assessed. So your HVAC, your lighting, your BAS, building controls, all of those things, in order to make reasonable upgrades where you can and preserve functionality instead of installing net new. And recommissioning specifically focuses on getting value out of that existing equipment and making sure it's operated the way it originally was intended to. Drift is a real thing. Set points get changed, manual settings or automatic settings get turned off, and audit and recommissioning helps to kind of reset all of those things to what they should be so you're maximizing the use of your buildings. And these laws are less common, which is why we're not going to talk as much about them for the rest of this presentation, but they are growing. New York, for example, has had these kinds of requirements on the books for quite some time, Seattle as well. And as BPS grows, I think you're also going to see these grow. So they're interesting to know about and to at least understand the basics of. And then finally, climate disclosure, which is sort of the newest uh, source of these kinds of laws. So this is more of a fast moving category. You're seeing it pop up. It's been in the news quite a bit around laws in California. New York has a new one on the books. So rather than focusing on the building itself, these laws focus on greenhouse gas emissions and also climate related financial risk. So let's dive a little deeper into some of these, starting with benchmarking. So, benchmarking has a number of names. You might hear them called clean building laws or energy benchmarking. Building transparency is another one that's pretty common. And about 20% of the country has either a statewide benchmarking law on the books or proposed, including newly enacted legislation in Massachusetts, and then big cities, Wisconsin being leading among them. Madison and Milwaukee had new legislation as of last year. Fun fact, the state of New York has proposed a statewide benchmarking mandate every session for the last 8 years. And it's not often, or actually has never had the traction to pass, but they're actually hoping that this year it will, in fact, have the votes to pass. And one of the reasons that we're seeing these ramp up a little bit is because of the de-emphasis by the federal government on building benchmarking, climate data, climate laws, things like that. That has been very much walked back by the current administration. So you're seeing some states and cities wanting to escalate those efforts and kind of fill that gap. And as I mentioned, these kinds of laws require large building owners to report gas, electric, occasionally water use as well, to a common system. Most often that's Energy Star Portfolio Manager on at least an annual basis. And from there, you can compare both how you're doing over time and also how you're comparing to your peers. So there are limits to this type of reporting. And normally it's a staged or a scaled implementation. So usually much larger or specific types of buildings like government buildings will go first. And then that square footage and the types of buildings will kind of walk slowly back, and the law will become more broad as time goes. It's not unusual also to have exemptions. Manufacturing is one that's pretty common to be exempt from these kinds of laws. And states make them for a number of reasons. So, usually for them, it's kind of their first step towards a statewide or a citywide emissions goal. So that's one of the reasons that public buildings are often required to sort of go first, is because they're looking to meet a state or a citywide mandate. And of course, buildings account for a lot of space and a lot of energy consumption, right? So 40%, according to the federal government, of US energy consumption comes from buildings, 30% of GHG emissions. So anything that can be done to walk that back is a significant lever that states and cities see that they can pull to adjust those numbers. And the other sort of interesting thing that states and cities do with this data is they use it to give give policymakers the information to design targeted programs, benefit programs. So rather than offering broad incentives, and both states and the federal government have rules and regulations that they work with utilities to offer energy savings incentives and ways to save on your utility bills, things like that. And rather than just do a sort of a one size fits all and hope that those incentives hit the mark, when they have benchmarking data, they can tailor those better and they can reach the right buildings, the right audiences for things, excuse me, like incentive programs, tax grants, or I'm sorry, tax abatements and grants, and then of course their own target setting. So those are benchmarking laws. Now let's talk about building performance standard, which is sort of that next level. So usually benchmarking comes first and then BPS comes second. So what you do when you have that benchmarking data that's showing that certain types of buildings are consistently underperforming, the natural next step then is to say, well, let's address that and let's get them performing better. So that jurisdiction will set targets, whether it's energy use intensity or carbon emissions intensity, plain old emissions, whatever those thresholds are. And then those buildings must reduce in order to meet those goals by a specified date. And those targets normally, again, tighten over time. So they might start out a little bit loose, a little bit forgiving. Non-compliance penalties for both benchmarking and BPS normally tighten over time. So things get more expensive. If you fail to comply or you fail in good faith to try to comply in year 5 as opposed to year 1. But of course, almost all states and jurisdictions offer alternative compliance, especially for things like historic buildings, again, manufacturing sites, things like that. So make sure if you're concerned that these laws apply to you, that you're digging in and making sure that you are actually on the list to comply. And then finally, let's dig a little bit deeper into climate disclosure. So, climate disclosure is much more about financial risk rather than climate risk. So, investors need consistent and comparable data, right, to understand the risk involved with climate change, with where your physical assets and buildings are located. So, there have been voluntary frameworks around this for a long time. But they vary pretty substantially. And this extends that transparency in a consistent way beyond public companies to include private companies. Basically, everyone is following the same rules, disclosing the same things. And what does that mean? Normally, it means definitely scope 1 and 2. Scope 3 is something that's still being worked on and understood. And then some also require not just the mathematical disclosure of your emissions, but also more of an essay or a report style about your actual climate related financial risk and disclosures related to that as well. So, again, similar to the reason we see benchmarking coming up as the feds have walked back, you see these sorts of rules coming up as well. They're also growing more quickly globally than they are here in the United States with us. So CSRD is the world's most aggressive mandatory disclosure framework that's out of Europe. Although, interestingly, they're also just as the United States. So, for example, we had SEC rulings a couple of years ago that were set nationwide to make this kind of reporting mandatory. That has been stalled and walked back. There have been similar court cases and other arguments in Europe as well. So it's not so simple as they're just multiplying rapidly. There is a very nuanced take on these kinds of rules. So let's talk about who is responsible for compliance with these kinds of rules. And I'm talking a lot about buildings and building owners and the types of buildings, but the fact is, especially for benchmarking and even into BPS, your utilities are required generally by law to very much be your partner in this endeavor. So all of these laws that I have seen city and statewide, certainly for benchmarking, require direct action from your utility, whether that's directly submitting on your behalf, on customers' behalf to Energy Star Portfolio Manager, or they're required to publish and maintain a portal and a database that you can easily access, often both of those things. And another big thing, especially with benchmarking, is tenant releases. So you're talking about big buildings, right? So it's not anywhere near as common that you're only going to have one owner or one person paying all the bills in a building. You're going to have tenants, you're going to have spaces that are rented and used by a multitude of people. So if you have 100 tenants in a building, then aggregating their data together isn't is going to make it, I'm sorry, is going to make it very hard to distinguish any one individual tenant's usage, right? Whereas if you have, say, two tenant aggregating all of that together, even if because you only have two tenants, it's still you're going to have an idea of who's using what. So for that reason, a lot of states and cities have rules that if you have 100 tenants, you can just go ahead and roll all that up and submit it together. If you have one or two or three, it's much harder to keep that anonymous, and therefore you need to have written permission from that tenant to use their utility data to comply with this law. So that's something that is on the side often of utilities to assist you with getting that permission. And if it sounds a little bit expensive, that's because it usually is. If it sounds onerous for utilities, it can be. So utility commissions have allowed historically utilities to come in and seek special rate cases to up the cost of energy utilities in order to recoup some of the cost of compliance from ratepayers. Governments might also offer incentives. They might go 50-50 with utilities or things like that as well, or give them other grants or tax cuts. But one thing that's important to note for you as a ratepayer is, and a building owner, if these kinds of laws are coming to you, to your state or your city, to also keep an eye on your local utilities commission as well, because it could be that your utility is, even though they're helping you for free, you want to check that there aren't other utility rate cases that are coming up to help assist in paying for those. So I've mentioned Energy Star a couple of times, right? And probably most of you know who Energy Star is, but if not, they are a free federal program. You might know Energy Star from the Energy Star efficiency stickers on your appliances at home, but they do a whole lot more than that. They host and manage Energy Star Portfolio Manager, which is the free software that anyone, you don't have to be under a mandate to do this. If you own a building, a commercial building, or a non-residential building, you can submit that building to Energy Star and get an Energy Star rating if you would like, on a scale of 0 to 100, or just get good information about how your building and your energy usage compares to similar buildings around the country or more close to you. So because it's free, because it's federally funded and mandated, and it's easy to use, it's very common that for these sorts of benchmarking and BPS laws, that Energy Star Portfolio Manager is the repository of choice. So it goes from voluntary to mandatory when you're now required to submit your data to comply with these laws. Energy Star last year, with the current federal administration, went through a little bit of a scare. There was efforts on the part of the federal government to no longer fund Energy Star. So those announcements kind of came a little bit in drips and drabs, as opposed to like one large formal announcement. It was through slide decks and talking points, things like that. So there was a lot of confusion at that time around, okay, what's going on with Energy Star? And it's not just folks like EnergyCAP, who, of course, we have an integration with Energy Star through our program, but there's been so many folks who are deeply invested in Energy Star. Manufacturers, for example, have invested a lot of time and resources in getting themselves Energy Star ratings for the appliances that you purchase, right? So you can understand the efficiency of those things. There's benefits for homeowners as a result of that. Manufacturers, other large building owners, there's a lot of benefit that comes from Energy Star and ESPM, much more than the cost of the program. So all of those folks, including EnergyCAP, banded together to submit petitions, recommendations, things like that. And happily, in January, HR 6983 was signed into law, which funds several organizations, but Energy Star among them, at $33 million, which is on par with the funding that they received in 2024. This was also the first time that Energy Star actually had its own line item in that bill, which was a really good thing. Now, moving into this year, the White House 2027 fiscal year budget does not include Energy Star. That's not unusual, right? That is actually quite common, so not necessarily something to be concerned about. But one other thing that is very important is that Energy Star now currently sits under the EPA. It is transitioning to the Department of Energy, to DOE. So in anticipation of that, the EPA's 2027 fiscal year budget calls for a significant cut in staffing from 13 full-time Energy Star employees down to 1, with the anticipation that DOE will then pick that up as that transition happens. The due date for that transition plan is early next month. So actually it's here in a couple of weeks. We're very interested in watching to see how that plays out. But the hope is, and the request would be, that DOE is hiring staff before and hopefully now, not after that transition, because again, it is so important to so many people. A couple of other interesting things that are starting this year that are new for Energy Star. One is the 11-month rule. So once a building earns their Energy Star certification, you now have a waiting period of 11 months before you can apply again, including for their new next gen certification. So if you're managing a large portfolio, if you're hoping to time those submittals in a way to show your improvement to investors or things like that, that's something to really think about is now there is a waiting period and you can't just resubmit, at any point. The other new development there is next gen. So that is a higher tier certification. It was launched in 2024. It requires a score of 75 or higher. And then a DHD intensity that is at or below the EPA's thresholds, along with other things like getting your energy from renewable resources and a couple other things. But that has been increasingly a popular option, again, especially as folks look at some of these other mandates and other things. So that's what's new with Energy Star. Last year, we were watching much more closely. This year, we have high hopes and hope that we have a smooth transition. So let's talk about a broad view of all the BPS benchmarking, other types of legislation that are on the books today. This is a map from IMT. IMT is a fantastic resource. They're nonpartisan, nonprofit. They're very good. So they have wealth of information, both about benchmarking, BPS, all these kinds of things. They publish this map, I believe, quarterly. This is the latest. And it gives you a really good overview of where benchmarking is active. And I'll say with a caveat, there are not planned or proposed legislation on this map. This is only what is available. So, a couple of interesting things to me about this map, especially having watched it now for several years. So, you'll notice the coasts, right? So, for a long time, we really saw sort of in New York and California these very coastal concentrations of these kinds of laws on the books, and it's really spreading. So there's meaningful activity across the Midwest, the South, the Mid-Atlantic, states and cities that were not appearing on this map 5 years ago. So Massachusetts, in fact, enacted legislation recently. New York is proposing yet again. So at some point that bill will pass. And we can talk a little bit more about some of these specific laws that I really want to dig into on the next slide. But this map is sort of a useful gut check if you're managing, especially a multi-state portfolio, to kind of understand where, and even Texas actually for the first time has benchmarking laws on the books as well. So understanding where that legislation lives now. And, again, it used to be sort of a coast and coast thing, but now others, again, especially as the feds have kind of gone to the side on this, that others are really seriously considering. So I want to talk about, and let's move this forward, a couple of specific laws that are both new and upcoming. So last year there was much to do, or much to do about California. With their laws SB 253 and 261. So that falls into that fourth category that we talked about of climate and emissions disclosure laws. So SB 253 requires an annual disclosure, an annual accounting of your scope 1, 2, and 3 GHG emissions if you are a company operating in the US with over $1 billion, operating in California with over $1 billion in revenue. And in February, this last February, so just a few months ago, they published the first reporting deadline, which will be August 10th of this year, for scopes 1 and 2. Again, scope 3 is a little bit more nuanced. So they're delaying scope 3 till 2027. And they're also not going to penalize folks this year. This is a good faith compliance year for that. So if you're giving your best effort, and especially if you haven't been gathering your scope one, two, and three emissions, and you're trying to do that for an entire prior year, they're giving some grace from that this year. I think that grace will probably evaporate pretty quickly next year. So really, this is the last year for that sort of gentle, good faith application, and then next year penalties of up to $500,000 per piece of your entity will kick in. So SB 261 has had a rockier road. This is the climate disclosure. So 253 covers scope one, two, and three, your actual mathematical emissions data. SB 261 covers that climate related financial risk disclosures. This is a little bit tighter. This is for companies operating in California with 500 million. So 253 is a billion plus, 261 is 500 million plus operating in California. However, this came up against some pretty substantial pushback and a couple of court cases pretty quickly. So that is actually still under consideration by the Ninth Circuit Court. It is under injunction, meaning that it is not mandatory to comply right now. 253 escaped that, so compliance is compulsory, but 261, because as it winds through its court cases, is not mandatory. So it hasn't stopped people from submitting. There's been about 120 companies who have submitted anyway already this year, but it is not mandatory right now. And until those rulings are final, and again, we're watching these kinds of court cases closely, it will not be mandatory. So the reason I like to talk about 253 and 261 is that was sort of a first of its kind. There was the SEC rulings, which again were like that sort of that first really big pillar, but those have been stayed. The federal government no longer defends or is proposing those right now. So that was sort of the first initial big pillar. And then California came in with these sorts of laws. Other states are now looking at California and modeling their own laws after that law. New York being the latest example of that. So New York has the state law 9072A, also known as the Climate Corporate Data Accountability Act. And that passed the New York Senate in February of this year. It's currently sitting in the Assembly Codes Committee. So it is not yet law, but it is expected to become law. And the reason that it's so interesting and important is because of how closely it mirrors SB 253. So we can see these just like benchmarking laws. Some of the very first were in New York, California, other places, Colorado. And others have really taken that framework and sort of copied and pasted it. And we're now seeing that with climate disclosure as well. So this very closely mimics both SB 253, applying to US companies doing business in New York with over $1 billion to disclose scope one, two, and three, along with climate risk and other things. So there's still specific language that's due around that from, I think it's the New York Department of Environment or Environmental Conservation by the end of this year. So by December 31st of this year. And the anticipation being, and the proposed date for scope one and two reporting being next year on July 1st of 2027, and then the following year to be scope three. So again, very closely mimicking California and watching closely to see the kind of challenges that go there for changes and adjustments, which in my personal opinion is one of the reasons that their final rules are due at the end of this year, is because folks want to see, exactly how this is playing out. So there's lots of other first time deadlines this year. Milwaukee is first time this year for June 30th of 2026. So that's coming up. Detroit's transparency data is due October 1st. NOLA is waiving penalties this year, but the obligation to submit to them is live this year. Colorado actually did some shifting of its annual deadlines, which is new this year. It's now November. And basically, if you have buildings in any of these states, it's a great time to check and make sure that your dates have not changed and that you're up to date with all of your reporting and compliance obligations. So That's sort of it for the overview of these kinds of things. And I want to talk about something specifically, which is the common thread, right, amongst all of these, and that is your utility data. So every one of these kinds of mandates that we have covered this year, whether it's benchmarking, audits, climate disclosures, BPS, all of those trace back to the same requirement that you need to have correct and accurate data that is extending back at least the entire calendar year in order to comply with these. And that sounds simple, but it's tough, right? We all know that. EnergyCAP knows that it can be tough. Utility bills come from dozens of vendors. They're in different places, different formats, and they all get entered often into spreadsheets, right? Which are not always reliable. And one of the stats that I really like to talk about is this 94% of spreadsheets contain critical errors. So where does that come from, right? That comes from a study that was the City University of Hong Kong, and they did this study in 2024. They studied more than 10 years of business journal articles, technical papers, critical, business critical, and important publications. And they found that there were business critical errors in 94% of those spreadsheets. So not necessarily simple typos or simple miscalculations, but actual errors that affected the outcomes for those businesses. And those outcomes included things like financial losses. There was actually a nuclear power plant that had operational issues as a result of the errors in their spreadsheets, patient data in the healthcare industry. So it's something that I has really stuck with me. I've used this study quite a bit to reference over the last couple of years because it's honestly it surprised me to understand how pervasive spreadsheet. And as someone who is mathematically inclined, uses a lot of spreadsheets myself, it's shocking to think how many errors you can have in those spreadsheets. And the reason that it matters for this kind of reporting is you're going to have auditors. You're going to have other folks scrutinizing this data. So if you're using spreadsheets to comply, especially for the first time, you want to make sure that you're really checking and understanding that you've gathered your data the right way, and that can be hard to do. So I pulled a couple of other stats from Deloitte and also from IBM around quality of data and the barrier that is quality data or inadequate data to ESG reporting and compliance. And the thing that sticks out to me about this is it's not volume of data. There's utility data that comes out of our ears, right? It's on all of these bills. If we're sub-metering, if there's other electronic or sub-meter data you're getting from your meters from your utilities, there is an abundance of data. It's not the actual data, it's the adequacy, the accuracy, the quality of that data, which is really hard. And then the other stat is actually our own stat. It's EnergyCAP stat, which 1 in 5 of the utility bills that come into EnergyCAP have some kind of error. Now, not every single one of those errors is a costly error per se, and that it will cost you money, although very often they are. That there's been an overlap in a day or a few days where they've now double charged you, a utility has double charged you. Or it was an estimated reading and it shouldn't have been, and that estimated reading is far too high. So there are things like that that happen very frequently. But sometimes they're just as simple as typos or that your number for your meter number or your account number is incorrect. And what can happen downstream of that if you're using spreadsheets and you're using them to comply with this sort of legislation is you end up with a line item of a meter that doesn't exist, or you're accounting for emissions, or you're not accounting for emissions that you should be because things have not been captured correctly. So it's truly, if I can give one thing that I have learned from compliance, and certainly all the way back to my days in the field where I was pressure testing pipe in the middle of the night, it's that your data not only matters, but the traceability of that data, the ability to thoroughly look back, trust the data, have auditors check that off to meet these sort of compliance is extremely important. So I'm going to end with chatting a little bit about EnergyCAP because I love talking about us and bragging about us a little bit. So some of the ways that EnergyCAP can help you, if you're not already an EnergyCAP customer and you're curious, to help you to comply, certainly benchmarking and reporting, right? So at its core, EnergyCAP is centralizing your utility emissions, meter, sub-meter data together. So all of your standard electricity, gas, water, steam, as well as other commodities like waste and any custom commodity that you might want to bring into the system. And it's bringing those all together. So from there, you have portfolio level visibility that can be very detailed. You can look at an individual meter, you can benchmark individual meters against each other, or very broad and high level. So folks use our benchmarking capabilities to find their own energy use intensity, cost use intensity, flag outliers. That's one of the best ways to see which of your buildings isn't performing as well as others and might not be as obvious. And then, of course, to see year over year trends. And of course, this includes automatic submission to Energy Star Portfolio Manager. You can either choose to have that automatically happen through EnergyCAP, or you can manually set that up as well. But your data is flowing directly from EnergyCAP into Portfolio Manager, so you're not double entering and spending time in two platforms. And that data flow is both ways. So your scores, your certifications, your submissions, your history is also preserved in EnergyCAP. And one thing that I will say, again, a Sarah tip would be since last year and some of the potential upheaval with Energy Star is we have been definitely encouraging folks to keep a copy of your Energy Star data. So if you have submitted to Energy Star in the past, whether you're doing that through EnergyCAP or you're just keeping your own copies, there are other free options available online as well. Just keep a copy of that because there's been so many changes. And again, as it changes hands again this year, it would be my recommendation if you don't have that data somewhere, just go ahead and make a copy for yourself and for your own records. And of course, Carbon Hub, which is our carbon accounting and emissions accounting module of EnergyCAP. So the reason that that matters in this context is that your utility and your meter data is really, especially submetering and things like that, is really the source. It's for sure the source of your scope 2 and much of your scope 1 as well, your scope that data. So as bills are entering EnergyCAP and you can have them automatically turned into emission sources and then have those emissions calculated, it makes that so much easier. We use standard factors. We have a large library of standard factors, EPA, EGRID, IEA, location-based, market-based, all of the standard things. Or you can do custom factors as well. And then managing and reporting your scope 3, there's all the ability to do that in EnergyCAP, including carbon offsets and RECs, things like that that you can track. So the other thing that I will caution and encourage, whether you're considering EnergyCAP or other solutions, is make sure that they are financial grade. And we really use that term to say that this is data that is tracked, that you can pull back to its very source, to the bills or the calculations, wherever that came from, that it's a very simple and transparent and easy process to get all the way back to that. And when you're using Excel spreadsheets to calculate your emissions and you're kind of trying to hand enter factors and things like that, it can get a little bit confusing. So you want to make sure that, again, whether you're DIYing, whether you're considering something like EnergyCAP, that the solution that you have is truly financial grade, because especially as compliance penalties tighten, and your data really has to be accurate, you want to make sure that that is in fact what's happening. And something that's important for us at EnergyCAP is that connection between kilowatt hours, dollars, and then tons, that sort of trifecta of all of your utility data. And to me, that's what makes your carbon reporting meaningful, because it opens up all of the doors for other fun things, or what I think of as fun things, like M and V, we have cost avoidance, right, which tells you, okay, well, I've done all of these wonderful things and now I'm using less energy. So how much would I be using, even if prices are rising, right? I'm using less, so I'm paying less than I would have been otherwise. You can also put that into emissions, right? In terms of emissions and emissions avoidance. And everything is working together to save cost, to avoid emissions and lower usage, which is better for all of your equipment, your building health, all of those other good things as well. If there are any utilities on the call or folks who work closely with utilities, we do have a flavor of utility management that is specifically for benchmarking compliance for utilities. So all of the things that we chatted about that utilities are required to do, so tenant releases, aggregating and anonymizing all of that data, submitting to Energy Star Portfolio Manager on behalf of your ratepayers, all of those things, EnergyCAP has an out-of-the-box solution for that. We have utilities that use it from all across the country, from New Jersey all the way to Seattle and other places in between. So that is an option if you're curious about that. And of course, it's an add-on. Utilities have buildings just like everybody else. They want to reduce their own usage just like anybody else. They also might have more tools that they'd like to offer their customers as part of that mandatory portal on understanding their own energy usage, things like that, charts, graphs, reporting, recommendations. Those are all things that EnergyCAP can help you with. And again, this is the flavor of EnergyCAP that does that for utilities specifically. And then final thing that I want to chat through today is AI. And we're going to talk at EnergyCAP more about AI in the coming months, particularly at some of the conferences and other things that we have coming up, because we have strong opinions about not so much AI itself, although we do about that as well, but the quality of data that's underlying your AI and how to make sure that your utility data is ready and is going to maximize whatever AI tools you're using. But our internal tool is Watts. So EnergyCAP Watts AI is our AI engine for energy management. It is woven into every part of our platform. One of my most favorite parts of that being Watts Chat. So that lets your team ask natural language questions and get organic answers. And of course, Watts is connected to your carbon data as well. So not only can you get some help and some information from Watts about how to comply or resources or more information about these kinds of laws, but Watts can help you pull together answers to questions about your emissions. It is also we have a strong roadmap for even more and more reporting with Watts, but there are reporting capabilities as well. So again, as we look for ways to do this to comply with the least amount of time, the least amount of resources, which everybody has, Watts AI and particularly Watts AI chat is one thing that I always like to talk about when I talk about EnergyCAP. And on that note, I think that is it for me. And as I said, we're going to be a lot of places here coming up. On May 20th, please join us for the Energy Strategy Series for my colleague Tom, where he'll be going over HVAC basics. Again, like this is intended to be a very informative and hands-on type of webinar. And then he'll do part 6 in June on BAS 101 as well. And then in between, if any of you are going to the Smart Healthcare Facilities Convention in Houston, we will be there and we will see you there. And I think that's it for me, Mats. Did we have any questions in the chat while I was chatting away?
Hey, we did not get any questions. If anyone, oh, someone raised their hand. If you want to ask a question, up. Hand is now down. I don't know if it was a mistake. Sometimes I also accidentally click the hand raise button. Um, but if anyone has any questions, just put them in the chat. We'd love to answer some. I think Greta, you had your hand raised.
Thanks, Anne. Thanks all for putting up with my voice today as well. We, Greta,
And
we do
okay. Yeah, all good.
Hmm. Mads, one thing that I realized I didn't go through, and it is probably known to this audience, but want to make sure that I do, is what are scope one, two, and three emissions? And scope one, so you're going to hear those a lot, and there's sometimes confusion about scope three in particular. So scope one emissions are emissions that you're generating on site. So those are on site. Oh, I apologize, my throat. So those are emissions that you're generating yourself. And then scope two are going to come from your utility bills. So that's going to be all of your purchased energy or utilities that you bring in. So scope one is like if you have a natural gas boiler that you're burning or fuel that is for your own set of fleet vehicles, that's on-site generation. And scope two is going to be all of your purchased electricity, those sorts of things that are coming in. So your utility bills are going to be your core source of scope two. And then scope three are your indirect emissions. So scope three is a broader category. It also spans the entire life cycle. So for example, if you're a manufacturer, it's not just the emissions that come from your supply chain to bring in all those raw materials for yourself and for your own manufacturing, but it's all the way to the emissions that are a result of your purchasers cycling that product to the end of its life and how that is disposed of all the way on the back end. So scope three is very broad. It's very detailed. I think there's 15 categories of scope three. And of course, EnergyCAP can manage and report on all of those. But it is, I would say, it's the least understood chain. It's the least understood part of emissions. And there are great resources out there, including EnergyCAP. We have multiple published blogs and other explainers about all of emissions types. But the reason that you see those scope three deadlines later out than scope one and two is because it's more detailed, it's more nuanced. It takes folks longer to understand and to gather that data because they're relying not just on themselves and a simple check of their utility bill. Well, simple for thousands and thousands of utility bills, but it's not as maybe obvious, but they're relying on not only their engineers and their processes to understand the life cycle of their own products, but also where they're coming in from other folks and manufacturers and other partners and how they come in as well. So scope three can be a little more complicated, a little more nuanced. If you have questions about that, again, EnergyCAP has some great educational resources on that.
Okay, I don't see any questions. So I think,
Mhm.
Sarah, that means you did a very great job at covering everything.
I hope so. Well, it was wonderful to spend my afternoon or morning or evening, wherever you are, with all of you. Again, thank you so much for putting up with my scratchy voice. Please don't let it deter you from future webinars where I sound much more melodious. And again, if any of you will be in Texas later this month, we'll see you there, and we hope to see you at future webinars with us. Thanks all.
Yes, thanks everybody.